India's Reliance Communications wants to sell a minority stake, and AT&T may be among the suitors. But whoever ends up buying in, making money on this deal won't be easy. We partner with the Financial Times to bring you Lex on Bloomberg so you can get a sneak peek at the FT's flagship column a day early. Ben McLannahan joins us now live from Hong Kong.
Good morning.
Ben, good morning to you, or good evening. Let's talk about AT&T for a moment. Why would an American company based in Dallas with all kinds of problems with its network here be interested in India's #2 mobile phone company?
Well, the explanation is obvious. It's a raw growth story. India is the second largest mobile market in the world, just after China. 600 million users at the latest count, and it's growing by about 20 million a month. And there's just no way you can get anywhere near that kind of growth rate in a mature market like America, where the mature operators are just sort of exchanging users among them.
Okay, that's a fair argument, but what about Reliance? On the surface, it seems to be a pretty interesting, profitable company, profit margins of 21%, but from what I gather, it's all not so good.
Yeah, the profit margins are pretty good, 21%. That's about double AT&T's, for example. But if you look at the rate of subscriber growth and look at the rate of EPS growth, it's out of kilter, suggesting that the problem underlying all this is one of excess competition in India. And that's certainly the case. It's arguable that the regulator has allowed too many foreign competitors into this market. The threshold for foreign ownership is very high. You can go up to about 74% for a foreign operator. And that's encouraged any mature market operator to get into India at all cost, and that's having a ruinous effect on the rates that subscribers are paying for their usage. Telenor, which has a local subsidiary called Uninor, that's a Norwegian company, it's charging about 1/5 of a rupee every minute, which is less than half of 1 cent, and AT&T can surely get much better returns than that back in the US.
So should AT&T or MTN or Emirates Telecom, whichever company does end up making this purchase, be a little cautious?
Well, they should certainly be wary of Reliance's game plan here, which is to stoke up some competition, to generate some kind of auction. There was an interesting quote on Bloomberg today from the spokesperson talking about posting a matrimonial ad online and then declaring availability and hoping to elicit offers. That's clearly trying to elicit some kind of auction, which is what the Indian government did last month with the 3G and ended up doubling its initial estimates of the overall take.
Ben, one quick question. Doesn't it all come down to price? At least if you can buy in low enough, should be attractive?
Yeah, it all comes down to price, but you look at AT&T's returns on invested capital, which are pretty good, about 7.5%, which is in excess of the weighted average cost of that capital. If you look at Bharti, its WACC is about double its return on invested capital, which just illustrates the scale of the challenge facing someone like AT&T.